Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another daily cryptocurrency market update. If you are new around here, every single day at 1 p.m., we release an update just like this one, where we not only take a look at the cryptocurrency markets, but the markets around our markets that we know we are correlated to, and try and help us piece the puzzle together to figure out where we are heading. And we've been doing a pretty good job of that, I feel. And today we're going to be really extending that. We're going to be looking more immediately at the week ahead. It is going to be a busy week, ladies and gentlemen, not only in terms of economic reports and data. Of course, we've got the rate hike decision, which is pretty much set to come out at 25 basis points for the Fed. You know, they're set to up interest rates to 5.5%. And this is pretty much a given. Now, I think this is largely pointless, and we're going to be looking at a number of things calling out the Fed's hypocrisy and kind of QT that perhaps may not be. It's very interesting to me that the Federal Reserve's balance sheet, which is very correlated with the markets, just to show you this using Bitcoin as an example quickly, the markets actually, certainly Bitcoin, looking at the WRESBAL, which is the Federal Reserve's balance sheet, bottomed at the same time that the Federal Reserve's balance sheet put in a low. And if we look at the stock market, it's been rallying really since a new low failed for the WRBWFR, which is another kind of chart displaying the Fed's balance sheet. So they are doing QT, but also a lot less aggressively in correlation with the markets rallying recently. And we've also discussed at what point does QT become QE, which sounds absurd to people. Well, what we're talking about there is the interest payments that you raise in the name of tightening actually cause things like the debt ceiling had to be raised, which means more debt issuing. Fiat is backed by debt. We're going to talk about that by looking at the kind of banking system and just why Bitcoin is so needed. Talking about the fact that banks currently have 0% reserve requirements, which is just insanity, which basically means that they can take your 100,000 and make 200,000 out of it without having any reserves. You know, the fiat system really is in trouble. But we'll be looking at this. We'll get rid of these for now and we'll sort of go over it in more detail. We're going to be really focusing on the week ahead a little bit to start the video off. Going on to the Bitcoin chart, looking at the Dixie, which is the dollar, which had a real spiller. You know, we ultimately would assess that this is what we would call a stage 4 breakdown. And this is going to continue to the downside. If you look at where the dollar's come back to, it's actually right around its what was previous support that now may have flipped as resistance. And actually, this could be the week that Bitcoin flips that 30K range. But I want to be very cautious here in regards to people using leverage. You could have a final spill before you, just to get everyone short again before you take that 30K level. You know, we've essentially been ranging now for over a month at this point. Or around about a month, 31 days, depending on what month you want to pick. There could be a final drop before you get that sort of rocket booster to the upside. So just be very careful. So let's get into it all, guys. Let's start things off with the week ahead and look at some key events that are taking place there. We've also got company earnings and a number of other things. We've got a lot of PMIs coming out. Now, this is largely going to be interesting for the dollar. Now, the dollar's been appreciating from other countries lagging behind it in terms of inflation and interest rates. There's now that catching up, and you can see this playing out in the Dixie, which is, I think, 40+% against the euro. And then, you know, the pound, the Japanese yen, a basket of other currencies. So if these come out better than expected and you're seeing that kind of lagging effect now catch up, but these other currencies, the Dixie may continue to fall, which is good for our market. And actually, it's been quite surprising. Stock market's been doing well on this Dixie weakness and saw a little bit of resistance in regards to the Dixie strength. Bitcoin has been kind of almost doing its own thing, consolidating around about 30K, which we said is kind of suspicious given how much Bitcoin is traded at this level, and also all the big news that we've got from the likes of BlackRock and such in regards to it. So we've got lots of PMIs coming out in regards to manufacturing. We've got US consumer confidence. On Wednesday, we've got the big one, which is the rate decision. They're basically set to do another rate hike. You know, you don't want to bet against this. 99% probability in regards to the Fed watch. However, that could be the final rate hike. Markets seem to not really care that this is already largely being priced in. When you get it, there may be this sigh of relief as we move into no more hikes. We've looked at the context of the S&P under going from an aggressive tightening cycle into a pausing of rates. We've done lots of analysis on that. I don't see other channels talking about that. Then you got the ECB rate decision. They're set to raise rates also. So this could be why the Fed's actually raising rates, because they don't want to lose too much sort of steam against their competing central banks. But US GDP, which is going to be interesting. We've got better GDP stats than I think a lot of people were expecting, given the kind of headlines and everything going on. And we've told you, actually, just ignore the headlines, guys. We've looked at a number of things. We were very right on getting back into the markets generally since the start of the year. If you look at things like the S&P, which everybody's been screaming bearish on, this has gone nothing but up this year, despite the headlines. If you look at Apple, new all-time highs. If you look at Amazon, my personal opinion is on the way to them. If you look at the likes of Microsoft, you can see it had a real run. You're in price discovery, you're pulling back, you might consolidate, find this as support, and then see that continuation. We assess that the markets are in an actually good place. I was looking at one earlier, actually. These guys are filed for a Bitcoin ETF. Typical stage analysis playing out here, and ultimately looking for that upside. This is stage 2 breakout at this point. So the stage 1 base, stage 4, going from a stage 3, and rinse and repeat. So the headlines have largely not been very accurate in terms of predicting the market. Economists make the worst investors. And that's because things don't often make sense. If you listen to people like Stan Weinstein and people like that, he said he threw his economics degree out the window when he became a trader, because the two don't gel. So we've got the rate decision, ECB, we've got US GDP, and then we've got the Japanese rate decision, German PMIs. Lots of sort of inflationary data that's likely going to affect the market. And the interesting thing here is, how is the dollar going to respond? Is it going to find this support now as resistance? Potentially. We will see. You've got this clear support level. You're running into it. Now do you see that further downside and continuation? And actually, if that was marginally lower, this could be now downside, real downside. We're talking coming down to these sort of levels down here. And actually, maybe there's an inverse head and shoulders. A head and shoulders here. Not so confident on that, but I can certainly see the dollar getting down to these sort of levels here, which is very interesting. Risk's likely going to do well. We've got a number of other reasons to suggest that risk's going to do well, so on and so forth. So it's going to be a big week. You also have company earnings. These are all the companies that are coming out in regards to earnings this week. We had some mixed. Netflix got really bad data. I think that weighed a bit heavy on the stock market. But you got these earnings coming out this week. Tuesday is going to be massive, with the likes of Google, with the likes of Microsoft, Snapchat, that we actually looked at, again, applying stage analysis to. This could potentially be in a stage 2 breakout. You've certainly taken this resistance, or you're certainly consolidating around it, maybe get a bit more pullback. We want to see a clear break here, and then we can call this a stage 2, and you're ultimately looking for upside. Very interesting that the stock market, your smaller stocks are in the same place as altcoins, and your larger stocks are in the same place as Bitcoin. Larger stocks leading the market, some of them new all-time highs, sort of selling away for the smaller stocks. Same way Bitcoin's really selling away for the altcoin market. Very interesting sort of cross-market analysis there. We've also looked at the fact that Bitcoin, we think, is actually going to do better against the SPY, and we still think the SPY is going a lot higher. So you've got Visa, and then Wednesday you've got like Boeing, CME Group, Coca-Cola, Meta, Quantum Space, which I think we actually also looked at. And then Thursday, you've got McDonald's, MasterCard, Ford, Intel, Roku, which is another one we looked at, actually. Very interesting that we're going to be getting this data when we've sort of done, we think Roku's in a good spot as well. These are all primed for breakouts at this point, guys. So actually, this week could be your 30K taker. But, this is a big but, I do think you're doing a very similar thing to what you did here, right? You could drift off a little bit more and come maybe and find, maybe you get down here or something before you see that upside continuation. So just be very careful trading from a leverage point of view, guys, please. I think if you're new to retail trading, get the investment side of things right. Come and learn things with me like stage analysis, and come and learn, look at my portfolio, look at how we do, get the kind of investment side of things right. And then move on to trading, and set the time apart to be a trader. Trading is quite literally a full-time job if you want to do it right. And it's a journey that will test you. It's almost like, I've always said this, trading is almost one of the best ways to get to know yourself that there is, because your P&L is a reflection of you and how you deal with things and how you trade and so on and so forth. But enough of me rambling on about stuff that most people don't care about. You could get a final stab here before you see that upside continuation. Just be careful of that situation. But this very much could be the week where Bitcoin breaks 30K. Certainly look at these earnings, certainly look at correlation, a number of other things. Let's talk about a little bit of boring macro stuff now. Boo, I can hear all the boos. In fact, before we get onto this, let's talk about the Fed balance sheet. Very interesting looking at this one. That Bitcoin actually bottomed. Look at the correlation here. Let's get this off log. In fact, no, let's keep it on log to kind of cheat and make it look a lot more like I know what I'm talking about. But you can see the correlation here. And it's very interesting to me that Bitcoin bottomed perfectly at the same time that this put in a bottom and started to rise. Look at how correlated these are. This is analysis that others don't do. The people that are still bearish and that have been bearish, a lot of them flipped after FTX, by the way. Remember, we were out for most of 2022. We only got back into the market. It's a hard decision to make, but we made it, despite all the headlines. People that are still bearish have got wrecked this month. I mean, on the stock market, on crypto generally, and they're going to continue to get wrecked and continue to be wrong. If you've anchored down on being bearish at this point, you might be waiting 2 years for you to get validated on that, and then eventually a crash comes and the yield curve plays out. Very interesting, the Fed balance sheet. So they've been doing QT, beating their chest. You can actually do stage analysis on this as well. Look at this bounce. Very correlated, and this is continuing to go up. The Fed have no other choice but to propagate and continue the Ponzi scheme that is the fiat system. So we're going to talk about that. This is liabilities and capital. Other factors draining reserve balance with Federal Reserve banks. Let's take a look at this. Remember, here was where they had to step in. SVB, Silicon Valley Bank, was a good thing for the stock market generally. I'm going to get a lot of hate for saying that. But look at this bottoming as well. I hate the fact that it comes up in orange. We want that in a nice S&P red. I mean, look at the correlation between these. It's stark. You can see, look at where this bottomed. It's been going up since. Is this set to continue to go up? We will see. And something we'll be watching. And stay tuned to the channel. Make sure you smash that subscribe button if you're not already. Like and a comment is appreciated. To stay tuned. So this problem has existed for centuries. It's about duration matching with regards to bank lending. Banks currently have 0% reserve requirements since 2020. What you'll hear about, but they have higher reserve to deposit ratios than they did 20 years ago. What you won't hear about. So it's kind of a bit of a mixed story. This is from Crypto T. US banks have 0% reserve requirements since 2020. If John deposits 100K, his bank can loan all of it to Sarah. So now John has 100K in his bank, and so does Sarah. 100K was just created out of nothing. So on and so forth. And you can see this is actually the official stats. But March 2022 is not what made the problem. It's been a problem for centuries. People like Wisey's were writing about it over a century ago. So she is referring to Ludwig von Mises, who, of course, is a famous Austrian, somebody I got into after hearing Ross Aubrey talk about him, so on and so forth. So when banks don't match deposits and lending durations, they're inherently gambling based on probabilities. Here's a chart of banks' cash reserves plus banknotes to deposits as ratio. It's higher than the 1990s. Why? Because it all broke in 2008. And so they printed a lot of new base cash. So the fiat system, Bitcoin is, and I want to really reiterate this, we're not a Bitcoin maxi. We think Bitcoin maximalists that champion these weird and wonderful creations where it's like add-ons to Bitcoin have not even understood the first paragraph of the Bitcoin white paper, which essentially Satoshi was very clear about not implementing a third party into this system, and they've all gone and done that. However, I think Bitcoin it's almost like divine intervention. And I think it's really brought about so many questions that were relevant, and it's done it in a fashion that many others had failed to do. Bitcoin is nothing short of spectacular. We're 100% on board with Bitcoin. We back it 100%, and we think it's amazing. We just happen to think from an investment point of view, you're going to get higher returns on certain altcoins, but I do think Bitcoin's going to do exceptionally well, and ultimately been watching that, tracking it, and very right on it. So the fiat system is well and truly a joke. Again, yep, exactly. It's what we call not YCC. YCC, it is, of course, complementary to their not QE. Yeah, so the Fed are doing one thing and saying they're going to do another. You can see this here. They're supposed to be doing tight inflation, killing, but they're actually not at the same time, and they've kind of weakened off on it. And the markets are like a bloodhound. They've sensed this, we've sensed this, and ultimately took a position back into the markets, knowing this and sort of assessing that actually we were kind of almost expecting 2008 for 2008 to play out again. We do think it was going to play out again. It was going to be different. It's going to have different catalysts. However, it's not going to come until the yield curves are inverted, and you could have 24 months until that happens, and you're going to be sat on the sidelines bearish. You might even be unlucky and shorting it and just get absolutely destroyed. So if you look at these two, for example, beautiful double bottom there. We're looking at this actually. I've just recently put together a course where we look at stuff like this. But this is 2008, drastically different from the price action that you've seen today. Price action is king. Forget the narratives, forget the news, forget earnings, for goodness sake. Just follow the charts and everything else will make sense, and you will outperform if you understand charts correctly. Everybody else, all the economists, all of the macro LARPs, the armchair whatevers, the YouTubers, the Twitter accounts, you'll outperform all of them if you just know how to follow the chart. So that's not an endorsement on myself to do. It's for you guys to come on board and do that. Go and learn that in however which way. And the best way to learn is to actually go out and do it. I think most traders will agree that their trading journey starts with them getting wrecked. Mine certainly did. I'm not ashamed to say that. So did my investment journey. And you learn from that. And actually, this is what my channel was spawned out of, was we're here to share basically our mistakes with you and prevent people from doing it. And right now, we very much assess, and we continue to make mistakes all the time, by the way, that the market is in a very good position. So extremely volatile week ahead. Just to recap very quickly, guys, you have lots of data coming out. You've got the Fed's decision. You've got company earnings. Interesting that we've looked at smaller caps, and they look like they may be able to break out. Has anybody else given you that round package information on YouTube? I don't believe they have. Smash that like button. Share this content around, guys. And lots of interesting things going on. Dixie at a key level. And remember, the fiat systems are a complete scam. On that note, I'm going to love and leave you. Enjoy your Sunday dinner, guys. I know I will be. And I'll see you all in the next YouTube video. Thanks all for watching. See you in the next.